All right, we're still here on Market Pulse. Right now, we're picking up the pulse of the day, tracking market activities and getting insights. We have David Olujimi to provide some perspective to the data. Hello, David.
Hi, good afternoon, Joanna.
Yes, it's a pleasure to have you in. Let's begin with a focus on activities on the NGX today. We saw a lot of sell pressures on Owando stocks and some of the banking stocks. What are your thoughts on activities for the day on the NGX and the relatively bearish run we have seen so far this week?
So basically, one of the things for Owando is that investors are doing the thing where they come in and they go out. So this week we've seen in Owando, just like we saw over since the start of the second half of the year. This week we saw Owando gain 9.97% on Monday. On Friday last week, we saw them gain 9.90%, Monday 9.90% yesterday. But today, some investors say, okay, this thing has reached 43. In fact, Owando almost hit its year high price, 43.3 naira yesterday. Then today, there was a lot of sell pressure because today, when you look at the volume of trade on Owando stocks today, we have about 66 million shares Owando traded just today. That is the highest so far recorded in the second half of the year. That means that to tell you that there was a lot of sell pressure because of the price level that it had gotten to. It got to a point for investors to say, let's take profit. And that's what they did. So concerning the bearish move,
does that signify that, perhaps they don't see the stock going any higher considering the volume and, investors taking advantage of the price right now?
No, not really. This is a stock that has gained about 270%, 277% this year to date, second highest gaining stock in the NGX. And it's not a small stock. It's an oil company. It's a reputable company. So many people had bought into the stock. For example, people bought into the stock when Owando was trading at about 8 naira last year. Some people bought into it when it was trading about 2 naira in 2020. Everybody bought into it at different points. For some people, they bought into it when it was trading about 13 naira, maybe back in the days. But as far back as 2014, the highest Owando ever reached as far back as 2014 was 13 naira. That's like over 10 years ago. Owando is trading at some of its best levels in the past 10 years. Like we've not seen these levels in ages. So people who bought into the shares at this period are feeling like, oh my God, this is a good cash out time. Imagine buying into Owando when it was 8 naira.
Right.
Now you're going to have to sell it at about 39, 40 naira. That's like 500% gain. That's a lot of gain. That's a lot of return. So not because they don't see value. Can you anticipate what?
A further rally on the stock, even though we're seeing it dip at this point.
So no, it's not. We are going to see further rally. We are going to see further rally. I'm anticipating the stock gets to up to the 15 naira price level because a lot of things are going to be happening with Owando in the coming years, in the coming days and coming weeks. Owando is one of the stocks that has had like a lot of outside the market. It's one of the oil companies in Nigeria that has had a lot of attention on it. So we'll be seeing more activity. Plus, it just bought Ajib. The company just bought Ajib. So we are waiting to see their 2024 earnings results because I'm projecting them being one of the highest earning local upstream companies in the country. I'm projecting to see them at the level probably higher than Seplat. I think they're going to be higher than Seplat. So we're going to be seeing, and there's a probability that they're going to pay dividends too. If they pay dividends, that's even more for them.
For you to say at a level higher than Seplat. Seplat is 1,000 naira right now, isn't it?
No. I'm not talking about their share price. I'm talking about their revenue generation. The amount of revenue that I'm seeing them generating in the next couple of months. It's probably going to be higher than that of Seplat.
Okay. Now let's come to the fixed income side of things. A lot of activity with the federal government bonds. But if we take a look at the corporate bond side of things, we're witnessing a significant decline in activity. In 2022, it peaked, at about 688 billion. But we've seen that decline, ever since. This year, for the first half, we've only seen one corporate bond issued. Talk us through the decline of activity in the corporate bond market and the impact that this could have.
So basically, one of the reasons why we are seeing this is because corporates cannot really keep up with the interest rates that market is demanding. So when you see the commercial paper sector, we've seen about 600 billion worth of commercial papers and corporate bonds issued in the first half of 600 billion plus. worth of commercial papers and treasury bills, commercial papers and corporate bonds issued in the first half of the year. Basically, what that tells us is that the interest rate is getting high. So for Dangote Sugar issued commercial papers at 25%, recently 28%. That is a lot of term, short term. When is long term, that is for the corporate bonds. We're not seeing the interest rate right now. Many of these companies cannot really keep up with what the government is paying on its own FGN bonds. Government FGN bonds is issued about 20% right now. We're seeing government issuing FGN bonds at 20%. Basically, the corporates cannot really keep up with that. So I think what they're resorting to is they're resorting back to normal bank borrowing, and that's another issue that many of them are facing. Even as they're trying to resort back to normal bank loans, we've been seeing that there's a decline in the level of bank loans they've been getting. That is also traceable to the fact that the high interest rate environment right now is not good for the corporates. The high interest rate environment right now is a stranglehold on corporates, and is a stranglehold on those that are operating in the corporate sphere, because they cannot just keep up. When the banks were going 25 to 30% interest rate on borrowings. When you go to the capital markets, we are going 25 to 28 to 30% on commercial papers. So somehow, one way or the other, is all due to the high interest rate environment. And considering how much is their margin, by the time you factor in their margin, all of the margin is already gone into repaying loans and borrowings.
Yeah, I mean, that's quite a lot that the banks have to deal with. But let's move now to their performance on the NGX. Investment bankers are now adjusting price targets of DMBs. For most tier one lenders, analysts have shifted their price expectation upwards. We're seeing Zenith Bank. It was given an accumulated rating with expectations that its upside potential is above industry average. What are your thoughts there, considering recent performance in a couple of weeks with Zenith Bank sliding, on the NGX?
So basically, the number of factors looked at, we'd let you know that, okay, some of these stocks, they tend to be undervalued right now. So we have Access Bank trading at 18 naira 75 kobo thereabout. The 18 naira level, basically 18 naira 75 kobo, 18 naira 80 kobo. This is a stock that had an earning per share in 2023 of about 17 naira. That is almost a price to earnings ratio of 1.00. That is like, and in this same market, we have stocks that are doing so well with price to earnings ratio of about 12, some 13, some even as high as 40. And we have a situation where our deposit money banks are some of the best performing stocks. When I'm talking of, like, as their businesses, they record the most net income. They are paying some of the highest dividends. They pay the highest dividends payout. I'm not talking of dividends payout ratio right now. I'm talking about the fact that Zenith paid 125 billion. I think GT paid about 900 billion. UBA paid about 90 something billion in that region. So we have these banks paying a lot of dividends, more than most of the other companies, and yet they have their share prices very low. So it's just a normal reaction of the market to say, okay, we see these bank stocks going up. It's the normal reaction of the stockbrokers. The stockbrokers are projecting that based on this factor and this factor. So in the next couple of months, we're going to be seeing our capital raising efforts from some of these banks. We're going to be coming to an end, not even a couple of months, in the next couple of weeks, and we're going to be seeing this new stock added to the market. So when we see all of this added to the market, it's new value for the market, and we're going to be seeing all of the share price dilution effect is done for. We saw FCMB already do their public offering, and they issued it at 9.75 kobo. They tell you that we're already done with it. We raised this money. This is a stock that was trading for about 11. This is a stock that was trading for even less than that. Traded for 9.20 kobo just the day before the start of the public offering.
Yeah, so it's a good time to hold bank stocks, basically. I mean, considering the fact that they are set up for appreciation in the nearest future.
Yes, basically.
Right. Thank you very much, David Olujimi, for joining me, and you're staying with me. This is still Market Pulse. Up next, the US dollar has been cited edging gently lower against other trading partners ahead of the Federal Reserve Chair Jerome Powell's appearance due this Friday. Markets appear to be running with the dollar's bear trend for the time being. I'll be putting the spotlight on this conversation after the break. It's midweek, but looking ahead, the end of this week sees the start of the U.S. Central Bankers' annual symposium in Wyoming. The meeting kicks off formally tomorrow and runs through to the weekend. U.S. Federal Reserve Chair Jerome Powell is scheduled to speak on Friday afternoon. Of course, investors are keenly awaiting signals on the future path of U.S. interest rates in Powell's upcoming speech, and also considering markets, take cues from U.S. economic data. Markets are already pricing in multiple rate cuts by year end, and the dollar has been, seen hitting its lowest level since the beginning of the year. Wouldn't this, demand some sort of global investors that they revise their portfolios? Well, to help answer our questions, we still have David Olujimi, who will be providing more insights. So, David, talk us through the performance of the dollar of late and how market dynamics are shifting based off of the potential statements and decisions that could be made in the days and weeks ahead.
So, first of all, there's a very high likelihood that interest rates in the US there's going to be a rate cut. All of the signs should point to the fact that there's going to be a rate cut. So, what we've been seeing basically is I don't want to say a weakened dollar, but essentially is a weakened dollar, because the dollar is not that kind of currency that just goes weak. So, we've been seeing a lot of shift away from dollar, especially shifting towards Asian, the yen, shift towards the yen and the pounds. So we've all been seeing it with all our African currencies. Over the past few weeks, our African currencies have been doing well against the dollar because there's a shift. The dollar is getting down to a low level. It's at least because all of it is based on the fact that everybody believes there's going to be a rate cut. The rate cut is very significant in what's the word now? It's very significant in reducing the tensions of a potential recession in the American economy. So what happened like that was last month, where Jeremy Powell refused to. That was not last month. That was at the start of this month, at the start of August, where there was no rate cut as expected, and all of a sudden the labor data showed that there's going to be potential recession, and the market went berserk. So, but this month, all of the signs point to a rate cut. So it's just expected that when there's going to be a rate cut, there'll be a decline in this currency level is going to go down a little bit. The currency strength is going to go down a little bit because more people are going to be pulling their funds out of dollar-denominated portfolios and trying to put it in stronger currencies and all. So basically, that's it.
Yeah, of course, that's all within the U.S. economy, right? What you've provided us. But when it comes to emerging markets, how do they tend to react with projections of further dollar decline on the horizon of a possible, rate cuts? And also, how do you see it affecting emerging markets who may be holding dollar-denominated debts?
So basically, it's essentially good news for them. It's essentially good news for them because when we have rate cuts, it means that at least our euro bonds can at least breathe a little. Our euro bonds can breathe a little. If we see the UST bills going down by 4%, we see it going down by 4%. At least our euro bonds can also breathe a little, go down a little. For Nigeria's case, in Nigeria's case, we see a situation where this rate cut is coinciding with a potential or an occurring dollar-denominated domestic bond. So we're going to be seeing some of our people will try to bring in their funds into this. Now we're seeing a dollar-denominated bond from Nigeria at 9.75%. At least that's what the Ministry of Finance is proposing. That's going to be, I think that's good for us. That's good for us. At least we can see the effect. In recent time, we've been seeing our currency go up a little. We've been seeing it. We struggled in the 1,590 level for quite some weeks, but now we are seeing it at the 1,570 level. So in the coming weeks, we should be seeing it go back to the 1,500 level.
All right.
Basically.
So, I mean, it sounds all positive, right? But before I let you go, are there any challenges, any negatives in that potential decision being made?
So basically, the only challenge I can see is that there's fears that any rate cut right now, analysts have projected that any rate cut right now has the potential of feeding into the narrative of a projected recession. You get, so we saw that happen last month.
All right.
There was a hike in the unemployment rate in the American economy, leading to fears that there's probably a reduction in economic activities, which is set the minds of marketers that we are seeing our economic activities reduce. We are going to be seeing decline in GDP, ultimately leading to probably decline in the GDP ratio, so ultimately leading to decline in the recession. So there are fears that a rate cut will probably feed into that narrative, and it may actually trigger more bizarre market activities.
We'll see how this all pans out and what it triggers. We'll be tracking all of that with the event this weekend and the events in the weeks ahead. Thank you so much, David Olujimi, for joining me.
Thank you. You're welcome.
Yeah, and that's as much as we can take on the show today. Of course, we'll continue to track market activities and what's going on both on the local markets and across the continent, and also in the US, considering emerging markets take a cue from there. So stick with us every weekday, 4 p.m. West African time, right here, Market Pulse on News Central in partnership with Nairametrics. Leaving you now with the international markets.